So anybody watching this recording, we're gonna start off this recording by me chopping my neck. You know why? Because I made a mistake. I sent the wrong Zoom link to you guys, and I am technically 5 minutes late, but you know what? We're 10 minutes late. So you know what? I am gonna chop myself to hold myself accountable to show you guys how you should chop your neck. Trust me, I've chopped my neck plenty of damn times, I'll tell you that. But I'll do it one for the one time, right? You know what? We'll do the other side too. Fuck it. That was not a. Have you seen my arms? That actually looked kind of hurt. Look, it's even fucking red. Guess how you know I'm white, dude. Jesus. All right, ladies and gentlemen, put a one in the chat if you guys are ready. Put a two in the chat if you are not. Whoever says that was a weak chop, why am I red on my neck now? Huh? That was such a weak chop. Why am I red? All right, cool. All right, let's get started. All right, let me just turn off the chat, ladies and gentlemen. All right, cool. Let me share my screen. Should I left the chat on? All right. If you guys could see my screen, type 1. If not, type 2. Cool. Cool, cool, cool. I did see a couple of you. I did see a couple. Look, bro, my neck is literally red. Bro, look, to whoever said it did not just hit my neck hard, look at that. And look at this one. That was a weak chop. Yeah, if you don't leave your neck like this after a chop, you're weak, my boy. And if you're dark skinned and you can't see the chop, then you're gonna have to just believe in yourself that it was actually art. Just trust me, my shit hurts right now. All right, cool. If you guys can see my screen, play type 1. If not, type 2. Just want to make sure. All right, cool. All right, sick. Ladies and gentlemen, let's start off today with what we left off yesterday. Let me go to my notes over here. Oh, great. My Wi-Fi wants to be slow right now. Technical difficulties. My Wi-Fi is deciding to be, or trading view is deciding to be very slow. For some reason, trading view with the no gap candlesticks is always slow. All right, cool. Cool. So we have gone through how to do a proper top-down analysis. Yesterday, we had a full breakdown of what to look at the market and for you to understand where the market is going to be at that very exact moment. I believe I gave you guys one piece of homework on what market was it? Let me see. What market was it that I gave you guys the homework on? Because, bro, my trading view is taking forever and I can't even like load up the notes. AUD. There was no homework. Yeah, I think it was AUD CAD. There was no homework, no homework. That was the class before. I didn't, oh, that's right, because I already told you guys to set up the area here for you guys to have the pullback on AUD USD. Cool. I think the homework was just watch the recording. Perfect. Catching up, catching up. All right, cool. Let me come back over here. Or I hate that I lose it sometimes. All right, cool. So we've broken down how to do a proper top-down analysis. Let me do a quick poll and to understand how many of you guys have watched the recording. So did you watch yesterday's recording? Yes or no? Okay. So we have a 79% that have seen the recordings, which is sick. I'm sure that clarified a lot of things. Aaron, Sony, sorry to hear that. Cool. So now that we understand how to do a proper top-down analysis, I'm sure many of you guys are now ready to execute the entry point. But before we get to the entry point, we have to understand various different things, right? And it's going to be what we look for inside of that entry point. Inside of that entry point, you're going to want to look for your entry signal and for a reversal or continuation pattern. So just to kind of hit a little refresh of what we've done up to this point right now, we've understood how to identify if a trend is bullish or bearish. And after we understand if a market is bullish or bearish, we've understood that we have to focus on the higher high and on the higher low. Cool. Now that we understand what a higher high and a higher low is, then we understand, we know we look for an area of interest only inside of this zone. After this, we look for an area that has more than 3 touches. We know that this could be an area, but it's not a valid area. The only valid area is an area that has 3 touches, which if we continue moving this down, this would be one of those zones, 1, 2, and then 3. Make a little zone like this. This is area of interest 1. And then we don't have any more areas of interest in this trade example. And now we understand that on the 4-hour, this is how the 4-hour move would look, right? Let's just pretend we're on the daily, that this would be the 4-hour move right now, and that we would both be at a higher high. And we cannot enter a trade at a higher high, and we cannot enter a trade if it's not at an area of interest. If you guys agree with me so far on this, say yes. If not, say no. I want to make sure we're all on the same page. We're moving quick, quick. Cool, amazing, phenomenal. Come on, we're picking up the pace. Picking up the pace here. Picking up the pace. Cool. So now we understand that we're all on the same page, which is phenomenal. So we understand that we have to wait for this price to have the higher low. And on this higher low, we understand that the 4-hour time frame is going to be going bearish in order for this daily time frame to have the pullback. Now, because the 4-hour time frame is bearish, it doesn't mean that you're no longer interested in the trade. That just means you have to wait for it to make it to that area, and you do not execute any trades on this pullback. You wait for the trade to make it here. This pullback is not the trade. The pullback is here, so then it can have the push to the upside. If all this makes sense and you guys agree and you get it, say yes. If not, say no. Cool. Cool. 15 seconds left. Cool. So I see that there's a 3% that this doesn't make sense. Please ask your question at this very moment. Let's make it quick. Alex A, what do you mean? AD Garg, I'm sure that you just misunderstood it. You know, you're not missing anything. Why does my measuring tool not measure pips? It does. Just go watch the recording. Josh Thurville. they have replied to you, you haven't completed something that they need to give you access to everything. No questions, all clear. All right, cool. I'm out. Awesome. Thanks. Amazing. Now that we understand and all this makes sense, and I literally did not read any questions. Let's move on. Now we are at the point where we are ready for the entry signal or the entry area. And I want you guys to I laugh, bro, because you guys are gonna literally look at yourselves and be like, that's it? Is that really it? What the fuck? You're gonna almost hate yourself for not seeing it like this in the past. And it's okay. You just simply did not have the knowledge, and I'm here to give you the knowledge. This is going to be so simple, if not the simplest thing that you could have possibly learned up to this point in the whole entire bootcamp. And it's going to be so simple simply because we have already seen this many different times. And we are going to use one thing that we have been using up to this whole entire point, which is called market structure. So now that we're ready for the entry part, because we understand how to do the proper top-down analysis, you understand you have to come to the time frame, start from the weekly, the daily, and the 4-hour, find where the trend is, put the areas of interest. Now we're either at a 1, 2, or 3. We're either 1 at a higher high, 2 on the way, or 3 at the area of interest. We have to wait every single time until it's at the area of interest. Now, when it's at the area of interest, ready to enter the trade. Now, this is what the entry signal is. For us to enter a trade, we only need two things. One is going to be an entry signal, and the other is going to be a shift of structure. The shift of structure always comes first. Alex, what the fuck is a shift of structure? What we've been doing everything up to this point. When this market is like this and this market is bullish, this market has created a higher high. If this is the higher high and this is the higher low, and this market has now shifted under this higher low, that is a shift of structure. This has shifted this bullish structure. That is a shift of structure. So what we look for is a shift of structure on the lower time frame at the area of interest. And only after we get the shift of structure, we then look for our entry signal, which is an engulfing candlestick. Now, as soon as you get a shift of structure, you typically get an engulfing candlestick. And you're going to want to enter your trade with the shift of structure and the entry signal in pre-London, London, pre-New York, or New York. And you want to look for this entry on the 15, 30-minute, 1 hour, or 2 hour time frame. That is simply it. Now, I'm sure this seems very simple, or maybe it doesn't. You want to see some examples of it. That's what we're all here about. So I'm just going to copy this right here because this is literally it. These are the two things we need in order to enter the trade. And I'm going to literally do you the same exact example that we've been using this whole entire time. And it's going to be very clear because you have a very clear understanding of it when it comes to this, right? So this right now, let's pretend like it's like this, right? So we've been waiting for this pullback. We've been waiting for this pullback. This is how it looks like on this time frame. We get rid of this, get rid of this, get rid of this. All right, cool. So right now, this is where price is currently. Is this price at a 1, 2, or 3? 1, 2, or 3? Interesting. 1, 2, or 3? 10 more seconds. I want you to make your decision so then we can. All right, these are the results. So one is we are at a higher high. So obviously right now we are clearly not at a higher high. This is a higher high. This is a higher high. This is a higher high. Clearly not at a higher high. So can't possibly be one because one is at a higher high or a higher low. So that's impossible. Process of elimination. I can see some confusion where on number two, the 15% of students can select that. And I get it. You can possibly think that we're on our way to area of interest, the weekly. Yes, 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 yes. We are on our way to the weekly area of interest, but where are we right now? Oh, we're at the daily area of interest. Well, that's what I asked you. I asked, where are we right now? Are we one? I didn't ask you if we're on our way to the weekly or if we're at the weekly. I asked you, where are we right now? And right now we're at the daily area of interest. So now that we're at the daily area of interest is where then we come in with the entry signal. So on the 15 minutes, I'm just going to put here 15 minutes, 30 minutes, 1 hour, and 2 hour. This is basically what it's going to look like, right? It's not always going to look this perfect. It's never going to look this clean, but this is more or less how it's going to look like. This structure shifts up and down a gazillion times, like literally a gazillion times. It goes from bullish to bearish to bearish to bullish very often. But what matters is that right now we are here and we are bearish. So we understood that for this daily time frame to pull back into this area, this is what the structure looks like on the 15-minute, on the 30-minute, and on the 1 hour. On this pullback, there is so much little bearish structure being created on the 15-minute, 30-minute, and then this is basically how it looks like when you zoom into it. What we need in order to enter this trade is simply two things. Is going to be one, an entry signal, and that entry signal is consisted of a shift of structure and the engulfing candlestick. Now we look for this on the 15-minute, 30-minute, 2 hour, 1 hour, whichever one looks cleaner. Now, I know that could be a little confusing. How do we know which one looks cleaner? And I'm going to show you many different examples on how you're going to be able to tell which ones are clean and which ones are not. So what is a shift of structure? Well, this is where the current lower high and lower low is. This is a lower high. This is a lower low. What we need is the first thing is for there to be a shift of structure. Because again, if we're trading with the weekly bullish and the daily bullish, we need to have the lower time frame show us the shift of structure. Because if the lower time frame is always going to be the first time frame that shifts the trend to continue going with the higher time frames. Now I'm going to repeat that. The lower time frames are the first time frames to shift in the same direction as the higher time frames to go with the higher time frames. It's like if the market is showing you their hand first. It's like if you are going to go surf a wave, right? Or can we use a fishing analogy here? Sure, I guess. It's like if you go fishing and the fish and like this GPS shows you that there's fish at the bottom, for example. Like they're showing you the hand first. Now you go out there and then you throw the rod. I mean, you throw your bait, hits the bottom, and you could potentially catch a fish. By the time you get your rod, put the bait on it, the fish could be gone. But you got the first hand first. You got confirmation that there's fish down there. You were able to see that there was stuff down there. So what you're seeing here is that the market is turning from bearish to bullish before it has the major move here to the upside. So now this lower time frame is bullish, and now it's going in favor with the weekly and the daily. So you're taking a trade that now is like the lower time frame is continuing the trend to the upside. I cannot stress to you how many trades I have taken that I have not waited for the shift of structure and I have lost simply because you wait for the trend of the market to continue with the higher trend of the market. After the shift of structure, this is where then you look for an engulfing. You look for an engulfing in the 15, 30 minute, 1 hour, 2 hour, whichever one it looks cleaner. And you're going to look for to enter this trade in pre-London, London, pre-New York, or New York session. Now, that is literally it. Before I asked, do you guys get it or not? I'm going to show you an example. Very simple example. I can literally go like anywhere on the chart and show you guys literally an active example. It's so easy just to create this shit ever. For example, let's use this trade right here, right? This trade. Let's be in the event, right? This is a current higher high, and this is a current higher low, right? Or not current, this was a higher high and higher low. We decided that we're going to place this as the area of interest because we have one tap here, two taps here, and when we go left, we get more taps, right? So what we want to do is have the market come to this area. Cool. So we know as long as we don't body close under this line right here, there's still going to be a bullish market on the daily. But when you go down to the 30-minute, it's very different. You can see how the 30 minutes, if it wants to load, has gone from going bullish into this area to then shifting to then bearish to then back to bullish. It's just all over the place. So we're waiting for price to make it to this area. So then once it makes it into this area of interest, which is this daily area of interest, we're going to then wait for the shift to structure and the entry signal. So our job right now is to literally just wait for price to pull back. Before I continue talking, you guys can hear me good, right? Because I want to make sure that my internet is not cutting my audio or anything. Yes? Okay, cool. All right, bro. I'll keep coming. All right, cool. So what we're going to see on the 30-minute is this. Price is going to be going bearish, structure, whatever. Once it's here, we then want to wait for the shift to structure, engulfing, and then we take the trade to the upside. That's literally it. That's literally the whole trade right there. That's literally my whole strategy. I promise. It's what I use every single day. It's very powerful. Only thing you need is literally patience. As much patience as me waiting for this chart to load to show you guys this example. So right now we're at number 2. So if I were to tell you, where is this market? 1 or 2 or 3? This market currently is at a number 2. 1, we're not at a higher high in the daily. 2, we're on our way to the area of interest, and 3, we're not at an area of interest, so we're on our way. Cool. So this is what this market is doing right now. It's doing its thing. Oh shit. We just have created a ginormous lower low. This market is currently still bearish. Well, it's not pausing. Whatever. Lower high, lower low. In order for me to take this trade, I have to wait for the body candlestick closure above that. Right now it's just doing its thing. So it's still bearish. Lower low, lower high, lower low. Okay, finally decided to pause. Cool. Lower high, lower low. We have to wait for a shift to structure. We're at the area of interest. We're just waiting for the shift to structure. Waiting. Created an equal low. Still waiting. Okay, cool. Now we have a new lower low. So this is the lower high. This is the lower low. Looks like we're now shifting. Still being bearish. We got to wait for a shift to structure in this market to execute this trade. Still nothing. So this could be one shift to structure right here. So if you notice, and there's so many lines that it's confusing, but this could be a lower low, lower high, lower low. We body candlestick close above, shift to structure. This is the real shift to structure right here. Here's another shift to structure. Like you can see how the structure is going from being bearish to then shifting bullish. This is where you want to enter the trade when the structure is no longer bearish. It's now shifting bullish because now we're taking the trade with the daily and we're taking the trade with the higher time frame. This trading view is literally glitching out. It's not letting me do anything. Jesus. So when we waited for this trade, where is it now? What example was I using? Was it Euro JPY? No. What example was I using? Euro JPY? What example was I using? NZD CAD? Where'd it go? Oh, over here. Okay, cool. So NZD CAD, you can see how we had the, thank you guys. So you can see how we have the higher high and the higher low. When we pull back to the area of interest in here, all we're doing on the lower time frame is just waiting for the shift to structure. This is where we have the shift to structure. And then here we can see how price shifted the structure. We went from creating, even on the 4-hour, which is, we don't typically look for it on the 4-hour, but even here you have the lower low, lower high, lower low, blah, 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 boom, shift the structure, retest, engulfing, boom, trade's gone. That's really it. I'll show you here on the 30-minute time frame better. If it even lets me go far, there it is. So it can get a little noisy, it can get a little confusing, but this is a trade that you would take at the shift to structure. You hold through the drawdown because we place our take profit and stop loss to reach strategically, and you don't really lose based on the way how we place it. So drawdown is normal, but we rarely ever lose. I feel like this is a fucking terrible example. I feel like I just confused some of you guys. Give me another chance. Give me another chance. All right, let's use the most recent trade, right? Euro JPY. So Euro JPY, we have this to be as the area of interest. When price pulled back into this area of interest, in here, we look for the shift to structure. Let's go to the 1-hour, for example. So the 1-hour was creating on this pullback, lower low, lower high, lower low, lower high, lower low, shift of structure. So this was the lower high, and this was the lower low. What we want to wait for is a shift of structure. So this trade broke above. Now we wait for the retracement, and in here we look for the entry signal. This right here was my first initial entry signal, but I think this was out of session or something, and I just simply was not interested in taking this trade right here. But this is the trade that I'd take all day, all night. but I guess it was out of session. We never took it. Then what ended up happening is we body candlestick closed under this area, which is cool. Great. Now we're bearish again. This becomes the lower low. We do the snake trick. This becomes the lower high. And now that this becomes the lower high, we get a body candlestick that closes above. We're at the area of interest. We shifted the structure. So here we are now above this. So if the weekly is bullish, daily is bullish, now the 1 hour is bullish. We have now had a shift of structure. That's the higher high. This becomes the higher low. And we have our engulfing candlestick right there. And then this is the trade that we take. It's literally that simple. Same thing could have happened on the 30-minute. This could have been the lower high. This could have been the lower low. We have a shift of structure. We body candlestick close above. That becomes a higher high. This becomes a higher low. You have your then morning star kind of formation. That's a terrible formation, but you have your formation right there. Here on the 15-minute, you have your morning star formation. So you enter the trade at the shift of structure. Shift of structure. Once this pullback of the higher time frame pulls back into the area that you are waiting for it to pull back, you then have to wait for the lower time frame structure to shift. You want to wait for it to shift on whichever time frame it looks the cleanest. It could be the 15-minute, could be the 30-minute, could be the 1 hour, the 2 hour, whichever one looks the cleanest. Now, the higher the time frame, the better, the more respected it's going to be. What I do when a trade is at the area of interest, I'm constantly flickering through these entry signal time frames to look for that shift of structure. Everything up into the pullback, you do nothing. So as price is on its way to this area of interest, you just simply wait. When price is at this area of interest, you're actively looking at the market every single minute, every single closure, every single candlestick, because you want to wait for that closure. You want to wait for the shift of structure. As soon as it shifts, I'm actively with my finger on the trigger, ready to see if I get my engulfing candlestick, take the trade in the session, and then I set and forget. That's literally it. Now, does that make sense? Yes or no? I know I have to do more examples, and I'm going to do more examples, don't you worry. But does that make sense? I mean, I'm very glad that this is what polls have come out to. Entry signal is the simplest thing ever because it is literally just structure. Once, for example, I'm going to show you. I'm going to show you guys this poll, right? So 97% say it makes sense, 7% not. Let me see if I can do one more example before I open up the chat to see if it can clear up some doubts for you guys, right? Let's use the GBP example, right? So we had a 4-hour area of interest pullback. And you know what? Before that, let me clarify one more point. If a trade goes to the area of interest, right? Before I continue to go, let me add this as well up here. Before a trade goes into the area of interest, and let's say we have the shift of structure or whatever under the area of interest. Like, let's say it happens like this, where the shift of structure happens under the area of interest. I am not interested in the trade. The shift of structure has to happen above or into it. I know that might be a little confusing, but as soon as I say it again, it's going to make sense. If you're buying, you have to be using the shift of structure at a support level, meaning the area of interest. You have to enter at the area of interest or inside of the area of interest, but you cannot enter under it. You can't have price break under the area of interest and then you have the shift of structure under the area of interest and then want to buy. It doesn't make any sense. You can't buy at a resistance level. Can't do it. If you were to do it, you would have to wait for price to get above it, retest it, and then take the trade. You can only take the trade if you're buying at a support level. So you can only have your shift of structure at a support level. And if it breaks a little bit under it, that's fine, as long as when you enter, the breakout and the shift happens above the area of interest and you use it as support. Whether you're buying at the shift of structure when it goes above it and then use it as support, or you're actually buying after it rejects the support level and you're using it as support, you're using it as support on both different scenarios. And that's all that matters. You want to enter off the support, whether it's support here or support here or support here. You never want to have it under, because then it's going to be resistance. Now, if that makes sense, say yes. If not, say no. Cool. I'm glad this happens. Cool. Perfect. So 9% don't understand. I'll do another example real quick, right? And it's crazy how something so simple can clear it up. Before I continue going into deeper and getting some of your questions asked, I might answer it right now, right? So let me do an example right here. Price is bullish, right? This is the area of interest. What we need is for price to pull back into this area for us to then buy. Can all agree on that? We understand that. This is where we want to buy the trade, right? We all agree that this is where we're looking to buy the trade at this level right here. Cool. We understand now that the 15-minute has to have a pullback into this level. And this is what it's going to look like, right? And in order for us to enter the trade, we have to have a shifted structure. So this goes from being bearish to then being bullish, right? So this is going to go from being bearish to bullish, because this goes from having a lower low, lower high to now having a higher high. This was the lower high, the lower low. Now it's shifted. This is now bullish, right? So we are having this shift of structure at the area of interest. Remember, you could either be 1, 2, or 3 at a higher high, which would be up here, on the way to the area of interest, or at the area of interest. You do not enter a trade if there is a shift of structure away from the area of interest or under the area of interest, because we are not at the area of interest. Because here, since we are under it, this can now be used as resistance to then sell, as it's been in the past. You only want to buy at support and sell at resistance. You don't want to buy at a resistance level. Makes no fucking sense. The trade simply is not valid anymore. You only enter the trade at the area of interest. You don't enter it when it's almost at the area of interest, when it's halfway there, when it's under the area of interest. You can't. You can only enter it when it's at the area of interest. Now, sometimes you can have price go under the area of interest, which is perfectly fine. It happens. But when you go enter the trade, you enter at the area of interest. You have to wait for price to break above it, then have the retest, and then you are entering the trade at the area of interest. This is where price is right now. All this over here, or in the past, where price is right now is at the area of interest. What matters is when you enter it. What it did in the past is what it did in the past. If she did what she did, she did what she did. Is where she at now. Does that make sense? Say yes or no. Perfect. 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 Now, again, a couple of examples, and this shit's a walk in the park, because it's just like, this is only complicated if you want to complicate it. Truthfully, like, this is really not that difficult. You have 8 seconds more. Pull to finish. So these are the results. 97% understand now, which is phenomenal. So let me show you guys the example on GBP JPY. So if you notice here on the 4 hour, this was area of interest 1, right? So what we are expecting for this price is when it pulls back into here is we want for it to sell, right? And on this pullback, we all understand that this is going to look bullish on the 15-minute time frame. What we have to do is wait for the shift of structure to then sell, right? So we enter at this shift of structure. Cool. Let's dig in. Let's check it out. So we got to go in here and look at the fine detail and see if we have a shift of structure. Start off by the 30-minute. Cool. So if we all know structure, we all know that this is the lower high, this is the lower low. This is the lower high, this is the lower low. I won't count this because that's one candlestick, and to me, the snake, this is the head of the snake. For it to make it up here, it could just very easily go through that. That won't count as structure to me. So if you notice, this is the lower high and lower low. Technically, there's no shift of structure. This is just structure in here. Because if this were to be, let's say, a lower low or a lower high or whatever, then we would have a shift of structure. Let me explain. Right now, let's say we would want to enter this trade. We would be looking for a shift of structure because this is right now the higher high, and this would be the higher low, this point right here. So this was the lower high, and then this was the lower low, but we just body closed above. And what ended up happening is this is now the higher high and higher low. If we were to want to take this trade based off of the 30-minute time frame, we would then have to wait for this to break under this, retest it, and then we enter the trade because that is what the shift of structure would look like. So here we are going from bullish to bearish. Here we are just staying bearish. So there was no shift of structure because we never went bullish. We want for it to be bullish on the pullback and then us enter the trade once it goes bearish. If it stays bearish the whole entire time, we don't know when there's a real shift of structure because there's no shift of structure. The structure just remains the same. This is just a pullback. This is just structure. Another example that I can give you guys, let's just say, for example, I have to, okay, for example, this one right here, right? So this AUD USD, we have been waiting for price to pull back to daily area of interest 1. And once it's at daily area of interest 1, we're going to wait for the shift of structure. So if you guys remember what I said at the beginning of the week is we would need for there to be a shift of structure. So if you notice this right here had a beautiful shift of structure. This had your higher. So we went from being bearish. So we went from being lower high, lower low, lower high, lower low, whatever. And then we shifted to now being bullish, higher high, higher low, higher high. So when this market is like this, and we have this, cool. This is the higher high. This is the higher low. Shit. That's the higher high. This is the higher low. What we need is for price to have a shift of structure. So once it shifts the structure, wait for the retest, wait for the engulfing, and then you enter the trade to the downside. Cool. Right now, no shift of structure. Shift of structure. Cool. We wait our pullback and then our engulfing candlestick to enter the trade. But right now, we're having the pullback, no engulfing. Let's check the 30-minute. We're having the pullback. This could have been a perfect entry right here. But if you look at the time zone, it's probably not the right time zone to enter the trade. This right here is an entry that I take 10 out of 10 times if it's on the right session. But this is your shift to structure. Higher low, higher high. Shift, retest, engulfing. That is a trade that I'll take 10 out of 10 times. I don't care if I lose. I don't care if I get wicked out. That is the trade right there. Boom, no engulfing, no engulfing, no engulfing, nothing. Price has now created a brand new higher high. So the shift of structure technically saved us from this trade if you did not enter this position here. But this is the trade right here. this is the entry signal right here. Shift of structure, retest, engulfing candlestick. This is what has made me millions and avoided hundreds of thousands of dollars in losses. Because I wait for the price to show me its hand first. It confirms to me that the structure had shifted, and then I wait for my entry signal. I tend to use the 30 minutes and the 1 hour the most simply because they are the most respected, but you can use the 15 minute, 30 minutes, the 1 hour, the 2 hour, whichever one looks cleaner. So right now, since we already broke through daily area of interest number 1, and we clearly did not respect it, like I was mentioning to you guys, we get rid of it. Now we're approaching daily area of interest number 2. Sorry, guys, I have boogers. I got like a little sick. So sorry if I'm like doing all this into the mic. But we're pulling up to the area of interest now. So this on the 15-minute, 30-minute, 1 hour time frame, we have a bunch of little structure like this. All we have to wait for there is to be a shift of structure, retest, engulfing, and then we sell. That's literally the trade. So we go down to the 1 hour. What do we have? This is the higher high. This is the higher low. So we would have to wait for price to shift under this right here, which kind of sucks because we get very far away from the area of interest. You don't really want that. This is where you go to the 30-minute. Oh shit, 30-minute looks a lot more clear. I would count this as a clean higher low because it's clearly very clean. Now we're looking better. We can pull up to the area of interest, have a shift of structure, retest, and then we still have a good trade. You know what? Let's look at it on the 15-minute. Oh shit, 15-minute looks even crazier. We can count this as the higher low or even this. If you count this as the higher low, then you can have a quick shift here and to trade and then sell. Obviously, you have to take into consideration the higher the time frame, the more respected it's going to be. I like to stay between the 30 minutes and the 1 hour. So this is what we would be waiting for on this trade. So right now we are almost at the area of interest. We always have to wait for it to touch it, even with a wick. It means that we pulled up to the area of interest. Then after that, you wait for your shift of structure, which would be literally what we would have replicate itself from right here. Price goes from being bullish to being bearish because we understood that the 30-minute had to go bullish for the daily time frame to have its pullback like this into this area of interest. Now, all we have to wait for is for the 30-minute time frame to just shift from being bullish to them being bearish. And then there you wait for your entry signal at the session, and then you set and fucking forget. Now, does that make a little more sense? Say yes if it does, say no if it doesn't. Okay, cool. I want to read some questions. Okay, so we have 90, 10. Cool, cool. Take your time. Trust me, this is not complicated. I want to make it nonchalant because it really is. And I don't want you guys to think about it too much. The more you think about it, the more complicated you make it, and it doesn't have to be complicated. So what questions do you guys have the 10%? What are you possibly confused at? Oh, wow. Okay, okay. Is the shift of structure the same thing as break of structure? Yes. I'm turning off the chat just for 1 second so I can catch up with all the messages. All right. If you say that the 30-minute time frame changes continuously from bullish to bearish, then how would you know that the shift of structure is just going to reverse again, especially if there's another area of interest further down? Great question, Harmon. So, well, Harmon's asking if the 30-minute is constantly shifting structure, how do we know that the shift of structure is not going to be another reversal? And we are, like, we do know it's going to be another reversal in continuation with the trend that we're trading with. And I'm not saying, or I'm not claiming that the 30-minute changes structure continuously. It just fucking does. Because all these big moves on the weekly time frame, they have to get created on the lower time frame as well. Like they have to get created on every time frame. So they're gonna change no matter what. Like I don't control this shit. For the weekly to have this move, the 30-minute has to have 1,000 candlesticks for this 10 candlesticks to go down. Just because it takes up so many more candlesticks for that one candlestick to be built. So how do I know that the shift of structure is going to reverse again? Is simply because we have trend in our favor. We have multiple time frames in the same direction. We also have an area of interest, and then we'll have the session and an entry signal. So these are all the things that shift of structure is now going to be in our favor compared to just shifting the other direction. Alex, how do you count the engulfing candle? The body engulfs the body of the candle to the left. Do you not count the wicks? Does the engulfing candle have to have a wick also? Can you please explain? I know you don't use wicks. So you're just a curious George. Well, your name's not George, but Bernardo Brunet. You just want to know everything, right? Which is totally fine, right? So you just want to know, like, does the candlestick have to be big? Does it have to have a wick? Does it have to have this? Does it have to have this? It's just an engulfing candlestick. You want to have this. If you want to know the exact pattern, it's going to be a bearish engulfing and bullish engulfing candlestick, which is inside of the Bible. So you want to have your engulfing candlestick, just one candlestick that eats the other. If you're selling and if you're buying, obviously one candlestick that engulfs the other. It's really it. It's really not more complicated than that. This is an engulfing candlestick. This is an engulfing. This is an engulfing. This big blue one is an engulfing. If it has a wick, cool. If it doesn't, even better. What else did you ask? Do the wicks count? The wicks don't count. I mean, they do count, but it doesn't really matter. So you just want a candlestick to eat the other candlestick. That's basically it. That's all I could really think of. Like, for example, right here, this candlestick ate the other one. It had a little wick. Cool. Not a big deal. Is the shift of structure the same as break and retest? Indeed, it is. And I have a last question from the last break and retest. I thought you would first wait for the 4 hour shift of structure. So I'm just talking about entry signal, not about like the trade specifically itself. I'm just talking about entry signal. Does this mean when price is at your area of interest, you wait for the shift a bit so you know that it's gonna go to the upside or downside to enter the trend? I mean, yeah, literally, Joseph, you just said it. Like that's literally what the shift to structure and what the entry signal is. It's literally what Joseph just said. Does this mean that when price is at your area of interest, you're gonna wait for a shift? You're gonna wait for it to shift a bit for then to know if it's gonna go up or down for you to enter the trade. Yeah, that's literally what I do. I'm letting the market show me their hand first. Like I know it's bullish, and when it pulls back to here, I know that it's going to go from bearish to bullish. So it's showing me their hand first. So the market is confirming to me that my analysis of the market being bullish is correct by them showing me their hand first. A 15-minute engulfing does the trick on the daily area of interest, or we must respect a gap of 1 UT between. I don't understand your question, Nicholas. It's easier to get faked out on the lower time frames, most definitely. But when we go into stop loss and take profit, I'm going to explain to you how to do that correctly. When you wait for the shift destruction in the 1 hour, how can the engulfing for your entry be on the 15-minute, or you must wait for the engulfing on the 1 hour? So if you have your shift of structure on the 30 minutes, you just look for the engulfing on the next time frame. So if you have a shift of structure on the 15-minute, if you don't get your engulfing on the 15-minute, look for it on the next one. If you have your shift of structure on the 30-minute, you look for your engulfing on the next one or your current time frame. Doesn't really matter. You could go down a time frame, but you always want to go up because the higher the time frame, the better the confirmation. So if you get a shift of structure in the 30-minute time frame, let's say like right now, right? So this went from bearish to now bullish. You now want to go to the 1 hour and you're going to be like, all right, cool. You go to the 2 hours, say, all right, cool. We have a bullish engulfing candlestick at your entry. If you have this shift to structure, you're gonna have an engulfing candlestick. You just want to confirm it. I'm going way too fast. Yeah, I don't wanna make it too complicated because it's not. I want to make it as nonchalant as I possibly can. this is my aha moment. I mean, we still have a little bit more. Like this can't, like there's more. Do we always wait for the retest after the shift? I'm gonna explain to that as well. Can you please define pre-session? So when you go enter the trade inside of a session, you're in like the movement already. So if we go here to trading sessions forks. So if you go into this right here, so you don't want to enter the trade like once there's already a shit ton of movement because the trade can possibly leave. You want to enter it right before, which is right here. So you see the lighter the color, the less the volume, the darker the color, more the volume. So you want into the trade right before the volume kicks in if you have your entry signal at that point. Obviously, if you get it in here in between where there's a lot of volume, sure, even better. But I'm saying if you have the opportunity to enter before, even better, because you don't get the entry moving fast. Like sometimes, like by the time I calculate the trade's already 10 pips in profit. So if you can enter it before London session or during, cool. But before is always best. But you don't get to choose that. The market gets to choose that for you. Considering the engulfing candlestick as an entry, how many candlesticks minimum should engulf? Just one candlestick is enough to engulf. This had my aha moment. I mean, if this is your aha moment, there's still way more. Like we still have a lot more to talk about. Like this is like um can you show us an engulfing candlestick? Yeah. I mean, you guys should have read the book. But an engulfing candlestick is just something like this, something that engulfs whatever's to the left. This right here is the pattern, morning star formation. It eats the last one or two candlesticks. The more it eats, the better. This is a perfect engulfing candlestick. This one ate 1, 2, 3, 4, 5. So this 2-hour candlestick just ate the last 10 hours. Indicates to you that there's obviously high volume confirmation. Do we always wait for the retest? I'll get to that in just a second. Under which time frame do you enter the trade? 15-minute, 30-minute, 1 hour, whichever one looks cleaner. So I wanna show you guys this because I wanna show you guys a live example, and I know I've had this here forever, and it's been pissing me the fuck off. So this right here. So remember at the beginning of the boot camp when I said that I took this trade, and we're gonna review it on week number 4 of the boot camp. Well, this is to show you guys how I did not wait for my shift of structure. So if you notice here on the daily time frame, price pulled back to my area of interest. So to me, this market was bullish, higher high, higher low. We came back to my area of interest, very clean level support and resistance. So when we are here, right, when we've pulled back into this area, I'm looking for my entry. So we have a beautiful pullback, higher low. We're at the area of resistance, support, everything's great. So this is where I'm going to go down to the 1 hour and the 30-minute, and I'm going to wait for my shift to structure. So up to right now, for me to enter this trade, I would have to wait for the break and retest above this up here because that's the lower high and that's the lower low. Even if this were to do something like this would not be my trade because there is no shift of structure. This market goes from being bearish to bearish because it only goes bullish once we body close above. It does not go from bearish to being bullish. I would need something like this. We have a lower low, then this becomes a lower low. This becomes a lower high. And then on this break of structure, shift of structure is then where I enter the trade. But for right now, I'm going to show you how I did not wait for my shift of structure and how I took a loss. And by simply waiting for the shift of structure, I could have avoided this loss. So up to right now, we're still bearish, still bearish, still bearish, still bearish, still bearish. So I entered the trade here and I am still bearish in the market. This is still the lower low. This is still the lower high. There is no shift of structure in this market at any given point. I just entered this trade to show you guys an example. And I did get a bullish engulfing candlestick, a morning star formation at this area of interest. But since there's no shift of structure I cannot enter the trade. You can have the best engulfing candlestick, the most beautiful engulfing, but if you don't have a shift of structure, you cannot enter the trade. You can't have the engulfing and not have the shift of structure. But you could have the shift of structure and not have the engulfing. The best analogy that I can have for this is you can have, let me see. You can have the GPS show you the fish and then you go cast for the fish. But I got it. So you can have the GPS to where the fish are, show you the fish, and then you put the bait on and you cast for a fish. But you cannot put the bait on and cast for a fish without seeing if there's any fish. You want the ocean and the GPS to show you that there's fish first. You want to make sure that you can confirm that there is species down there that you can potentially catch. But without them showing you that first, it simply does not make any sense for you to even pull out the rod and put the bait on it. Without the market showing you their hand first by shifting the structure in the trend continuation that you're going, you can have the best rod and the best bait in the world, but you cannot cast it because you don't know if there's anything out there. You haven't seen anything. You can't enter the trade even if you have the best entry candlestick without seeing the market show you their hand first. You need to wait for the shift of structure. So here I did not wait for the shift of structure. Price basically did a little kind of double bottom here. Boom. Okay, cool. This is now the new lower low. This is now the new lower high. The only way I'll enter this trade is once we shift above the structure level. And we never did. So if I would have just waited for a shift of structure on this market right here, I would have easily avoided a loss on this market. And even then, yet again, this would have became the lower low here. This would have became the lower high, never shifted above, lower low, and this would have became lower high, never shifted above. So it never had a shift of structure, so the trade never would have ended up playing out. Like literally, did not have a shift of structure at all. Lower high, lower low, body candlestick closed under, lower low. This became the lower high. Here we kind of have a shift of structure because it did body candlestick close under. This became the lower high, but we're not at an area of interest. No area of interest, shift of structure doesn't mean shit. Price kept going to the downside. So if this is now making just a little bit more sense, say yes. If not, say no. It takes a little bit of time. Trust me. All it takes is just different examples. There's nothing that I'm not using. All I'm using is literally structure and the two lines that we've been using. You can only enter a trade once we have the shift of structure. Without the shift of structure, you cannot enter the trade. And I know I'm going a little fast. One, because I don't want to complicate it. And two, because I'm peeing my pants and I'm going to go to the bathroom real quick. By the way, these are the results. Give me 1 second, ladies and gentlemen. I'll be right back. 1 second. And I did wash my hands for all of you guys that say I did not wash my hands. Okay, so what are your questions up to this point right now? Okay, cool. Was I right when I entered? Okay, so I don't know about that right now. Give me a second. I'll come back to that. Trust me, I'm not gonna end the Zoom call until 100% of the people don't understand the structure. So don't worry. Like I have to literally turn off the chat because I'm already at plus 100 messages. So let me go through all these messages first. Okay. Did the daily wick count as being an area of interest number two? Eduardo Martinez. That's not what I'm asking. We're talking about entry signal right now. If the weekly and daily is bullish, is the 1 hour and 30-minute shift bearish? I'm driving and I don't understand. Sorry if it's a dumb question. So it's not a dumb question. I just don't understand your question. For a bearish trade, you are saying you want the structure to break and create a new lower low once the shift of structure creates the higher high. Perfect example, right? And I think this is going to clear up a lot of questions, right? This is what I used last boot camp. I used the same the same example last time, and people got confused. But then I used this one, and somehow people understood. So this is what the weekly, daily, and 4 hour would look like. Bing. Right. This is what the weekly, daily, and 4 hour look like. A little bit different, you know. The daily will probably have a little more structure. And then the 4 hour will probably have a lot more structure in here, right? But this is, at the end of the day, they're all going to look like this, right? This is what the weekly and the daily will end up looking like. This is what the 15 minutes, the 30 minutes, and the 2 hour will look like. So this is the 15 minutes, 30 minutes, 1 hour, 2 hour. What it's going to look like is like this. It's going to have a lot of structure going bullish up into here. Then on this pullback, the structure goes bearish. And then it goes bullish again to do all of this, right? So if you notice, this is the exact same move. Let's just say, for example, this is Euro USD. Euro USD is currently at number one. It's at a higher high. It's at a one, it's at a higher high. This is what the 4 hour, the daily, and the weekly looks like. This is what the 15, 30, 1 hour, 2 hour looks like. It's the same trade, same market. This is what it looks like whenever you zoom in on each one of these time frames. What you want is for this daily, weekly, and 4 hour to pull back into this area. You want it to pull back into this area. Now, this is the area of interest. This could be area of interest 1, area of interest 2, area of interest 3, area of interest 4, 5, 6, 7, 8, 9, 10, doesn't matter. When price pulls back into this area, it's going to look like this on the weekly, daily, and the 4 hour. It's just going to look like a move, a couple candlesticks, and that's it. But on the 15-minute, 30-minute, 1 hour, 2 hour, there's going to be chaos going on. This shit will go from being bullish to being bearish just to make it back into this area for the weekly, the daily, or the 4 hour. What you need is once we're here, you can't just buy the trade once we're at the area of interest. You have to wait for the shift of structure. So break a structure, lower high to higher high, or whatever. You got to wait for it to change trend because it had to go bearish on this pullback. If this trend stays creating lower highs and lower lows and stays bearish, it's clearly letting you know that it's not done with this pullback. The pullback isn't done, and it probably wants to go to the next area of interest, which will probably then be here, for example. What you want is once it's at the area of interest, for you to wait for it to shift, for it to go from bearish to then bullish. for it to go from creating a lower high, lower low to now having a higher high. If this makes sense, say yes. If not, say no. Okay. It's literally so funny because it's the exact same thing as the last bootcamp. Everybody vote, everybody vote. Okay, so 96% understand, right? So for the 4%, let me read through these questions real quick, and we'll come back and do many more examples until everybody understands. So first we find the trend, then the area of interest, then we wait for the retracement into the area of interest. Then we need a shift of structure at the area of interest and bet that it's going with the trend. Okay, you've just cracked the code on how to become a profitable trader. That's it. This is what Kay said. So I'm just gonna right here. So first we find the trend, then the area of interest, then we wait for the retracement into the area of interest. Then we need another shift of structure at the area of interest, and we bet that it's gonna go with the trend. Yeah, that's taken me 3 weeks to explain. That's literally it. You got it, Kay. You got it. That's literally it. That's set and forget for you. That's literally it. It's simple. Is this the way you jump from 100 into a mil? Basically, yep. To clarify, it needs to get to the area of interest, then create a shift of structure once it's at the area of interest. No. To clarify, it needs to get to the area of interest, then create a shift of structure. Once the shift of structure is created, we have to wait for the pullback into the area of interest. And lastly, the engulfing, we cannot enter into the pullback. All right, cool. Let's read this one together as well. And I think this is where a lot of your guys' questions are, right? Shit. So this guy said, to clarify, it needs to get to area of interest. By the way, when you guys write in caps, it actually makes it harder for me to read. I don't know how to read in caps. I don't know how to read in lowercase. And this makes me feel like you're screaming at me, which I don't think is nice. Okay, so to clarify, it needs to get to area of interest, then create a shift of structure. All right, cool. So that's what we've done here. Get to the area of interest. So we got this. Then create shift of structure, right? Then create shift of structure. Okay, we got this right here. Then create shift of structure. Once at the shift of structure, we have to wait for the pullback into the area of interest, and then lastly, the engulfing. We cannot enter into the pullback, gets back into the engulfing, correct? You could. You could enter on just the break of structure. By all means, I do it all the time. But if you want to wait for an extra confirmation, you then wait for the retracement. And on this retracement, then the engulfing. That's if you want to wait for that. I'm going to teach you how to do it like that because that is the correct way to do it. I'm teaching you now how to drift with two hands, right? So we're already in the drifting phase. Now, if you want to drift with one hand and take a video with the other, that's up to you, you know? You're going to have the same, no, you're going to have a very similar control if you drift with one hand or with two hands. Speaking from personal experience, drifting with one and two hands doesn't really change anything because if anything, two hands could get a little complicated. One hand is cooler and you could, take a video. But the correct way to drift is with two hands. So the correct way to do it is to wait for the pullback. So to answer your question, Paul Gonzalez, do we have to wait for the pullback into the area of interest and then the engulfing? The answer is no. You don't have to. That is the correct thing to do. As soon as you have the shift of structure, you then enter the trade. But the correct thing to do is to wait for that pullback into the area of interest. Hope that answered your question. How do we know when the area of interest is no longer valid? when we break through it. So let's say that this is the area of interest and we break through it, it is no longer valid. I'm so confused. Do I get in on the break with the engulfing or on the retest? Please, this is the only thing I don't get from the entire class so far. Miguel, really? Chill. You don't have to be so confused. If that's the only thing you don't get, then you're not that confused. So this is Miguel's question, and I'm as you guys can tell, I'm taking my time with this because this is very important. I copied the rectangle. I'm confused. Do I get on the break with the engulfing or on the retest? So it's the same question that Paul just asked, but you asked it in a different way. So you get in on the break with the engulfing or on the retest. The correct thing to do is enter on the retest, but you can easily get in on the engulfing. I do it all the time, and there's nothing wrong with it. But if you want to be a bit more conservative, you can wait for the retracement. Many times, you waiting for the retracement, you will avoid a loss because you then realize there's no engulfing, and then the trade goes into your stop loss, and that's where I lose. But many times where you wait for that, you might never get the pullback, and then you miss the trade as a whole. So it's a 50-50. Once you're at that point, you can decide what you want to do. I personally have I rather be a bit more aggressive, and I rather enter as soon as it shifts, because to me, as soon as it shifts, the trade is just going to continue going with the trend. So the retest of the area of interest doesn't always have to be right to it. It could just be a little retracement, something like this. What matters is that we reach the area of interest and then we had to shift the structure from it. Not almost at the area of interest, but at the area of interest. Okay, so I'm going to open up the chat because I'm reading all these questions and they're literally all the same shit. So if you have a question and it's not what I've answered, please ask it right now. Why removing area of interest when it goes through it without a retracement? What if a retracement happens into the area of interest after, or do we disregard that? I don't understand your question, trader. Okay, I'm at 100 questions again, literally in 1 second. Can you guys please not spam your questions? As you can see, I'm clearly going one by one. And please, I'm not yelling at you. Okay, so before I even read it, I'm just going to copy it and I'm just going to put it here. Okay, I'm not yelling at you, but please answer. Okay. So what about when the weekly and the daily are bullish, but the 4 hour and every other time frame below is bearish? Do we need the 4 hour to shift structure before entering, or can you enter the 4 hour against the trend and the 30-minute shift to structure? So this is probably why I've been ignoring your question, Rodrigo, because you've been ignoring my lessons, you've been ignoring my teachings. So I've said that if you have two time frames in sync, as you're saying here, what if we have the weekly and the daily are bullish? You're good. You can literally enter the trade because all you need now is just a shift of structure to enter the trade. You don't need the 4 hour to be in the same direction because you just need two time frames in sync. So you've been ignoring my lessons. So I've been ignoring your question. But I'll answer your question, even though I have already in the past. And it is yes, all you need is the 30-minute shift of structure. You don't need to have the 4 hour because you have the weekly and the daily bullish. The 30-minute is the one that's going to shift for you. So I've answered your question. You've just ignored them. If the engulfing is the entry signal, okay, I'm going to have to do this just so. I feel like sometimes when I read it and I say it, it doesn't make sense. But when you guys read it, it probably makes more sense. If the engulfing / entry signal breaks once again, do I wait for the pullback or can we enter at the lower low of the engulfing? If the engulfing entry signal breaks once again, do I wait for the pullback or can we enter at the lower low? Enter at the break or wait for the pullback if you want. I think I already answered this question. All right, Avi, NZD CAD. I'm not breaking NZD CAD right now. Do you use any candlestick on the entry signal if there is a shift of structure. If there's a shift of structure on the upside. I don't understand. So if it never gives you, whatever, let me just do this right here. So if it never gives you the shift of structure, can you bet on the opposite side? Like I'm waiting the shift of structure to buy and then happen. Can I sell? Why the fuck would you want to do that, Patty? Why the flying fuck would you want to do that? That literally defeats the whole purpose of us spotting the weekly, the daily bullish, the weekly bullish, the daily area of interest to buy. Why the fuck would you want to enter a sell just because the lower time frame is still bearish? That is literally everything that I have been saying to not do. You don't want to sell this. You want to buy the continuation. You don't want to sell against the masses. Why do you want to sell this little shift of structure continuation to the downside? You want to continue trading with the higher ones. Okay, here we have a serious question. I'm just copying and pasting it. Okay, serious question about it. What if we get the shift of structure but never have a pullback? So we're touching the area of interest and then go straight forward to the target, missing the trade. Michael, you just missed the trade. If this just shifts the structure and it just does this, oh fucking well, buddy. The trade's gone. Find another one. There's nothing that you can do about it. What do you want to do about it? What do you want me to tell you? I don't know. I don't know. The trade's gone, the trade's gone. I don't know. I don't know what to say. Trade's gone. All right, we have another one. I'm literally going one by one. Like I'm not even ignoring one of these. Might have to though. What happens if price does not get back to the area of interest, but instead creates a new lower low and lower high, and there's a new range? Do you look for a new area of interest at this point? So you're literally complicating it. And again, these people tend to do this when they understand. They just want to figure out a different way to do it. But again, if we're not at the area of interest, we don't take the trade. I don't give a fuck if this shit right here starts creating a fucking ginormous vagina and telling me to enter it. If this starts creating whatever here, I don't care. We have to enter the trade only at the area of interest. So what happens if the trade creates the new structure on a new range? Do you look for a new area of interest? No, you don't. You stick to your area of interest. You don't create a new area of interest because price didn't decide to go to yours. You're not going to change your area of interest because the market didn't go to it. Don't try and chase the trade. Remember, trade comes to you. And these are the questions that I ignore because I've said this already, but it's okay. Today I feel patient more than before. So if I get the shift of structure in the 30 minutes or the 1 hour and your entry signal, so you're ready to take the trade, but you no longer have the two higher time frames in sync, do you still take the trade? Great question, but to answer your question, the answer is yes. But if you have the trade at your area of interest, the whole point of your area of interest is so you still have the higher time frames in your favor. If you set your area of interest under and then you have a shift of structure here, yeah, you can take the trade. So to answer your question in short, this is fucking impossible if you just follow the plan. You can't have the entry signal or the shift of structure at the area of interest and not have the two higher time frames in sync, because when the trade pulls back to your area of interest, it's still in between your higher low and higher high. This is why I ignore these questions, because it's almost like fucking like how did you come up with this fucking question? Like how did you think of this? Because if you have an area of interest, it's in between your higher high and higher low, or lower high and lower low, which is supposed to mean that you're still in the continuation of the trend. Like you guys really have to think deep for these questions, honestly. Like you have to think of like if an alien lands on Earth, will the grapes in my fridge go bad? Well, brother, if an alien lands on Earth, we have a bigger fucking problem. I'll tell you right now. You don't have to worry about your damn grapes. I'm telling you right now. All right, I'm ready to draw this. Do you stay? Okay, great question, Emil, I guess. Okay, no, not this one, not this guy. Do you stay in front of the chart throughout both sessions and wait for the shift of structure and the engulfing, or will you come back later? Great question. And that's what the majority of the trading consists is waiting for that once we're there. So whenever I'm in front of the markets and I say I'm like here for like an hour or two, it's because I'm just waiting for that. So to answer your question is I will wait throughout both sessions until I have the engulfing. Like sometimes I don't really have to watch the chart. I can just look. I usually set an alarm every 30 minutes, every hour on my phone because we have to wait for the candlestick to close. Or I'll just put an alarm at the structure point once price gets there, then I'll just be looking to it. So I'll be notified once it happens. So I'll come back when it gets notified, or I'll just check on it like every 30 minutes. As well, I believe I've said this already, but it's okay. I'll repeat myself. Um, okay, here we have another one. Well, I don't know why I keep saying that. We have a fuck ton of them. If the 15-minute has a shift of structure, would you still wait for the 30-minute to be more respected? If I don't like how the 15-minute looks, yeah, I'll wait for the 30. Lately, I have not been using the 15-minute really, but I only use it for the day trades and the scalps, and I'll explain that later. Right now, we're just going through the basic entry points. Can we, I'm just, can you give us the time for pre-London or pre-New York session? I don't know where you are, Austin. I have no idea where the fucking earth you are. So I can't give you the times, but I could give you this, and this is it right here. So you can do the conversion of EST 1, 2 in the morning, so wherever you are in the world. But yeah, these are the times, brother. Again, I've said this already. How far into the trade can we enter if the engulfing pattern occurred above the area of interest? That's going to take profit stop loss. I'll explain that a little bit. A sharp. Does the retest have to happen at the area of interest? It does not. You can have a shift of structure, and then the retest can happen with this 15-minute structure right here. You get an engulfing, and then that's your trade. You don't have to wait for the trade to pull back all the way. You don't. What you just need is for it to reject it once. If we enter the shift, okay, great question, Paul. This is a curious question, right? And I get it, and I'm gonna answer it. It's very easy, right? It's very easy. It's very easy. All right, so here it is. If we enter at the shift of structure, which is basically right here, and not at the retest, are we not away from the area of interest? You're damn right, partner. But you have your confirmation that we've rejected the area of interest, which is what we want. So we want to be looking to enter the trade once we're at it. And if we have the shift of structure, that's fine. That's our next entry. Now, if it's a little bit away, it's fine. We have our confirmation that it's rejecting the area of interest, which is going to go part of our confluences. Okay, let's see this one. What happens when it breaks the area of interest but turns back into and then makes a shift of structure? Is it still good to enter? What happens when it breaks the area of interest? I don't understand. But if there's a break of structure and it's a continuation with the trend and you're above the area of interest, you take the trade or under if you're looking to sell. How do you, okay, look, here we have J. David Jervo or Gyra. Just copying here. How do you recognize a potential shift of structure? How do you recognize a potential wave when you see it coming? When you see the shift of structure coming? I feel like this question's a bit self-explanatory. Might have lost 2 brain cells answering it, but it's okay. I'll get it back tomorrow. No big deal. Okay. Any more questions? Okay, of course. Avi, please hold on to that thought for just a second. Okay, dude, it's crazy because you guys are just spamming, bro. Stop spamming, dude. Jesus, that's it. We're at 100 again. It takes me like 15 minutes just to go through these 100 messages. So if the 4 hour gets to the area of interest, okay, let's just copy this shit so we can read it together. So if the 4 hour gets to the area of interest, which time frame do you start to look for the shift of structure? Do you start with the 30-minute and work your way to the 2 hour and use the highest time frame that looks clean? Then once you have the shift of structure on the cleanest time frame, you move up the time frame and look for the engulfing candlestick. So I'm just flickering through the 15-minute, 30-minute, 1 hour, 2 hour. So I'm working around all of them and just waiting for which one looks the cleanest. So the best example of this would be when I'm actually interested in entering a trade, and you guys will see how it happens in real time, which I guess the perfect example would be, I think it's CAD JPY. No, which is AUD USD, for example, right? So we're pulling up to the area of interest. And now that we're pulling up to the area of interest, I'm literally flickering the 2 hour. So for me, I wouldn't be interested in looking at the 2 hour for the shift of structure because this would be the higher low and that would be the higher high. So I would remove the 2 hour out of my watch list for entry signals because it would just be way too far from the area of interest. And I'm going to explain why that's not good in just a second, because that would fuck up the take profit, the stop loss, the risk to reward. It just fucks it all up if you're too far from the area of interest. Something like this is fine. So like, if you're a couple of pips away is fine. But if you're like fucking like already gone from the area, you're kind of screwed. So this I would not even be looking at because it would be too far, right? The 1 hour, I would not look at either because it's too far. This would be the higher low as well. So I would not be interested at looking at the 1 hour. Then we have the 30-minute where this is basically where it's at. So I would be flickering through the 15-minute and the 30-minute only because they're the quickest ones to have the shift of structure. The 1 hour shift of structure is all the way down here. So I'm not looking at the 1 hour. I'm looking at the 30-minute and I'm looking at the 15-minute. So to answer your question, Jesus. So if the 4 hour gets to the area of interest, do you start looking for the shift of structure? Do you start off with the 30 to the 15-minute? I start off with all of them. And then I find whichever ones look the cleanest and the most relevant to the point that I'm looking to enter the trade. And yeah, that's basically it. Okay. This guy's name on his Zoom is Road Trip. When it gets to the area of interest, we wait for the shift to structure, then then enter at the potential higher low to buy. So I've already answered this question for the 7th time, but I'll say it one more time. Once you have the shift to structure and the engulfing, you can enter the trade right there. If you want to wait for the potential higher low to buy, you could if you want to. It's just an extra confirmation. But again, I repeated myself, but it's okay. There goes another brain cell. Okay, so here we go with another one. So if we only have the weekly time frame bullish because the daily and the 4 hour time frame turn bearish, to get to the weekly area of interest, do we have to wait for the daily and the 4 hour shift of structure again? Do we still enter? Do we look for the new chart? So that's where the day trade would come in, and you would trade with the daily and the 4 hour. You would get a daily area of interest, and then you would enter the trade on the shift of structure. I don't understand what you're asking. So if we only have a weekly time frame bullish because the day and the 4 hour time frame turn bearish to get to the weekly area of interest, do we still have to wait for the day and the 4 hour to shift the structure? No, you don't have to wait for the shift of structure. You still enter on the lower time frame, or if it's too confusing, yes, you could just look for a new chart. What happens if you trade Asia session? There's just no volume. What if it gives you the entry almost at the end of New York session? Great question. I won't enter the trade. So what if it gives you the entry at almost the end of the New York session? I won't enter the trade. Wait into pre-London or pre-New York. How much? Okay, so here we have another one. Yeah. What do you mean pre-London or pre-New York? How much time before the market opens are you looking to get into the position? Max 1 or 2 hours. All right, here we go with another one. Okay. Let's say price is bullish and retraces back into the area of interest for buys. What if price breaks below the area of interest and later breaks back up? Does this shift the structure and give us an entry signal? Do we still buy or avoid because the area of interest was broken? So I feel like I've already answered this, but I'll answer it again for the 25th time. And it's if as long as the price, once it breaks through the area of interest and it comes back and it retests above the area of interest, we will then be interested in the trade. So I'll answer this again for the 25th time. If this is the area of interest and price breaks under, we will be interested on the trade as long as we break and retest above. But if we are under it, we will not be interested in it. If we use it for support, we then will be interested in it. And there's a lot of questions like this where I've already answered, but I'll be repeating myself for the 25th time, but it's okay. Today, I'm in the mood to lose the brain cells. Okay, we have another one. And I think this is going to be the last Q&A I might do because this is brutal. Okay. Let's say you're looking for a buy and you reach the area of interest, but the shift to structure is above the area of interest. Can you enter the trade or can you only inside of the area of interest? This is the only question I have. Can you please reply? Okay, so I feel like I've answered this question again 25, 35 times. So let's say you're looking to buy, like this example right here, and once you reach the area of interest, but the shift of structure is above the area of interest, can you enter the trade or it can only be inside at the area of interest? So if it happens above Rodolfo, or no, Rodolfo Lito, if it happens above the area of interest, so if this is the area of interest and it happens above, you cannot enter the trade. You either have to be at the area of interest or inside of the area of interest once it breaks and retests it. That's your only question, brother. I've answered it 25 times and you haven't been paying attention, but it's okay, man. It's okay. Jesus. All right, here we have another one. And I feel like this is the problem that I say things and people just don't listen because they have to hear it again and they have to hear it one-on-one. Question. So if we're at the weekly area of interest, should we look for the shift to structure in the 1 hour, 2 hour? And if we are at the daily area of interest, the 1 hour and 30 minute? So brother, I don't know where the fuck you came up with this, Armani. Once we're at the area of interest, we look for the entry signal on the 15-minute, the 30-minute, the 1 hour, or the 2 hour, whichever one looks cleaner. I don't know where you got these specifics that if we're in one specific time frame, we look for one specific type of entry signal. I literally wrote it down here. If you notice, entry signal, 15-minute, 30-minute, 1 hour, 2 hour time frame, whichever one looks cleaner. I don't know where in the fuck you got that if we're in the daily, it's the 1 hour and the 30-minute, and the weekly, the 1 hour. I don't know where you got that. But hey, dude, great creativity. Okay. And two candles engulf. I don't understand. How do we know when the area of interest is no longer valid? Because your example within the 30-minute looks like it broke it. An area of interest is no longer valid when we just break through the area and we just keep going. That's when it's no longer valid. Okay. Okay, here we got another one. And I'm sure I've answered this one, but I don't know. I just read it. Oh, it sounded interesting. Let's read it. All right. Let's read this together. So if the 4 hour gets to the area of interest, which time frame do you start to look at the shift to structure? Do you start with the 30-minute? Or okay, I already answered this one. He just spammed the fucking question. This guy didn't want to listen. Okay, cool. Now, if does all this make sense now? Yes or no? Okay. So I know what's going to clear this up. It's just going to be examples, by the way. Damn, dude, we've been here 2 hours already. Jesus. Okay, so these are results 94, 6%. So the majority understand, which is fantastic. I'm constantly trying to focus on this small percentage of people that are complicating it. I'm going to do more examples, right? And I'm not going to say a word. Thank you to all of those that said bless you. If you didn't, it's my ring finger, by the way. All right, cool. Check out the poll. Eight more seconds. Fuck, bro. I hate being sick. Okay. So there's clearly just a small percentage in here that is just trolls. And honestly, you guys are not cool. This is not funny. So clearly, this is obviously very bullish, right? Cool. Step one, bullish. Higher high, higher low, right? Now, without even knowing if there's an area of interest, without even knowing, is this one, two, or three? Without even knowing if this is an area, if there's an area of interest or not. Is this a one, two, or three? Shout out to Andy. Andy, my boy. Right? Yeah, no, at this point, I've realized there's very special people in here. Yeah. And trust me, we're gonna meet in person, my people. To the to the six to the 1% that clicked all of them. Oh, don't act like we're not gonna meet in person, brother. Oh no, 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 no. What do you think? Oh no, 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 no. One, we're clearly not at a higher high, so I don't know how in the fuck 6% of you guys put that. I can understand how 6% can say that we're at an area of interest because maybe you think we're at one and you can't tell because there's none. Okay, fine. And then I don't know where in the 1% of you guys think that it's all of them. What does that even mean? Like, what does that even mean? Why do we even have that there? Why would you even pick for that? Oh, you guys probably haven't even seen the results. Oh, there you go. There's the results. I was just talking shit without you guys seeing anything. So to the 6% that put one, I'll see you. I'll see you. To the 1% that put all of them, brother, you should highly, highly go see a doctor, a trained professional. All right, cool. So we understand that we are on the way to the area of interest. So let's call this the area of interest. We are on the way. Cool. Now we're at the area of interest. Shit. This is what it looks like on the daily. Shit. This is what this right here looks like on the 15 minutes, 30 minutes, and 1 hour. Ladies and gentlemen, this is what it looks like on the 15 minutes, 30 minutes, 1 hour, 2 hours. Ladies and gentlemen, does this have an entry signal to enter the trade? Yes, or you know what? This is a better question. Fuck that. Is this time frame bullish or is it bearish? Please. Is it bullish or is it bearish? Oh, this is the problem we got going on here. Oh, this is the problem we have going on here. I just figured it out. I'm a genius. Oh, okay. Oop, I got it. Also, chop your fucking neck. Somewhat. So many people are about to chop their necks right now. You guys saw how my neck was purple at the beginning of this call? Well, you're about to do the same to yourself right now. And if you're dark skinned and you can't see that you're purple, well, just make sure that it hurts. 28% of you guys claim that this is bullish. You know what? We're at the point where I can call you retarded. What are you? Blind? Are you legally blind? How in the fuck are you going to call this bullish? How is this bullish? Please, please tell me. Tell me how. Chop your neck right now. This is what you have probably been doing wrong. This is probably why you are making a mistake because you can't read the market structure. Because I was going to ask you, is this ready to enter? And you know what? I'm going to do a follow-up. Is this ready to enter? Yes or no? Oh, 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 oh no. We're going to have to call for life support right now. You're about to chop your neck so hard, you're going to have to call the damn motherfucking ambulance. If you're driving, pull over. If you're at work, go home. If you're home, go to work. Because there's an issue here. 18% of you guys have claimed that, yes, this is ready to enter. And it's literally the same amount of people that claim that this was bullish. This is not ready to enter. This is still bearish. We are still not having the shift of structure. This is bullish. We have to wait for this to shift from bearish to then bullish. It has to go from being bearish to then being bullish. So this is not ready to enter because we have not had the shift of structure. We're only ready to enter once we have the shift of structure. Chop your neck. Now, somebody that said yes now and called this bullish, who is it? Tell me right now in the chat your name, your address, and your phone and your mother's name. And why did you put that? Now, bro, I have to take a shit when bro, I don't care what you got to do, man. I don't care. Let me explain. Explain. I fat fingered it. You're lying. You're probably fat. You know what? So am I right now. I can't even lie, but it's okay. I'm just like bulky. Put the wrong pull. Oh, brother. You can't put the wrong pull 2 times, dude. Let me tell you that right now. So this example right here is exactly what in the fuck I'm talking about. We all know that this is bullish. We all know that this is the area of interest, and we all know that this is when we're ready to enter the trade. Now, when we're ready to enter the trade, this is all we need. And what we need is a shift of structure on the lower time frame. We got to wait for this to go from being bearish to being bullish. Now, when it goes from being bearish to being bullish, and then here we have a engulfing candlestick, we enter the trade. That is literally it. You have your entry here, you have your stop loss below, and then we'll have a take profit wherever we place our take profit, where we put our stop loss. We'll figure that out later. But this is literally it. Now you can wait for the pullback if you want to. You can wait if you want to, but you don't have to. And it has to be after it rejected the area of interest. If price is away from the area of interest, you can't do it. You're not at the area of interest. You have to wait for price to be at the area of interest, and then you wait for the shift of structure. Even if we're a little bit far, it is fine. Now, if all this makes sense, say yes. If not, say no. All right. All right. I'm about to have a fucking titty attack right now. I'm about to break this other monitor right now. Because at this very moment, there is a 1% of special people that don't get it. And I need you to tell me why right now. Now, if you fat fingered it, chop your fucking finger off. All right? You don't have the authority to use that finger anymore. Bro, you should be a comedian. Oh, dude, here we go. Hold on, I have to turn off the chat for this one. Here we go. This is a long one, all right? Henry Rich, I haven't read it yet. I'm ready to be disappointed. I'm not even gonna lie. Okay, let's do it. Let's read it. When it's this long, man, I just get scared, bro. Honestly, I can't. This has probably been the longest one all day. Here we go. Okay, here we go. Alex, where is it? Alex, you said this is a stupid question. If you get the shift of structure on the 30 minutes or the 1 hour and your entry signal, so you're ready to take the trade, but you no longer have the two time frames in sync, do you still take the trade? But what I meant was you draw the area of interest on the weekly and the daily, and you said you use the weekly area of interest more as it's respected more. But now you're past the daily area of interest you drew, approaching to the weekly area of interest where you had to shift the structure. So now the weekly is still yeah, this guy went fucking ham, dude. Dude, I know you confused the fuck out of yourself writing this, right? Brother, long story short, if you don't have two time frames in sync, you can't take the trade. Why are you overcomplicating this? This is what I'm reading here, but I'll keep reading it. I'll keep frying my brain right now. But now you're past the daily area of interest and you drew approaching the weekly area of interest where you've had to shift the structure. So now the weekly is still bullish and the daily and the 4 hour have gone bearish to get to your weekly area of interest. Now you get to the shift the structure, the engulfing in the 1 hour, but your daily is still bearish and you're still not interested to take the trade. Please tell me that this makes sense. I feel like I need to draw it out. No, I get exactly what you're telling me, brother. So the time frame is such the weekly is bullish at your area of interest. The daily just gone bearish, but moving up. The 4 hour is bullish. The 1 hour just gave you the shift of structure for the entry signal. And this has been the longest 48 seconds of me reading this, and I just fried my brain to repeat something that I have said already. Here, you don't have two time frames in sync. Weekly bullish, daily bearish, 4 hour bullish. Where in the fuck, Henry Rich, are the two time frames in sync? You motherfucker. You motherfucker. There's no two time frames in sync. There is no fucking trade. You just made me read. My tongue hurts from reading this. I almost bit my tongue reading this, Henry Rich. And I already answered this question. You just wanted to ask it a different way. Funny guy, right? Jesus, fucking Henry. Bro, I'm literally on the ground laughing right now. Oh my God. Simon, what's your question, dude? Yeah, he literally just needed two consecutive time frames. All right, guys. So I'm gonna do one more example, and then this is pretty much it. Because all I really am doing is just repeating myself. There's really nothing else to it. Once we're at the area of interest, we just wait for the shift of structure, and then that's it. Like, that's literally it. If you don't know what a shift of structure is, go watch the recording of me teaching what structure is. That's fucking it, bro. Oh my God. All right, cool. So let's say we were to be interested in buying at this area right here. They say that this would be the level of area of interest, right? In here. So this is where we would go down to the lower time frames, right? In here. And we would look for a shift of structure, like literally right here. We're at the area of interest. Here is we're gonna look for the shift of structure. Let's forget that a body closed under that it's bearish. Let's forget about that. Let's just pretend like that's not even there, right? We're gonna go to the 30 minute, the 1 hour, the 2 hour, blah 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 blah, blah whatever. So in here, you cannot, and again, this one is important. And it's funny because I literally picked a random chart and I get the hardest example to explain. You cannot enter a trade if there is no shift of structure. So this right here is the lower high, and this is the, Jesus, the lower low. All this shit in here happened with no shift of structure. This is the lower high, this is the lower end. Now is when you're supposed to be interested in entering the trade because there's an official shift of structure. But let's just say, for examples purposes only, ladies and gentlemen, for examples purposes only, let's say this was the lower low, right? For whatever in the fucking, let's pretend I'm blind like Henry Rick. Jesus, or whatever his name is. Sorry if I'm saying it wrong. It's not intentional. So let's say this is the lower low. We body candlestick close under. This becomes the lower low. Do the snake trick. This becomes the lower high. Boom. What do we have here? Shift of structure on the 30 minutes. Now we go to the 1 hour. What do we have? A nice engulfing candlestick. And this is somewhat of a trade that I would take. But in tomorrow's class, I'll teach you why I won't take this trade. But that's just the simplicity of it. Let's say we go down to the 15-minute. Perfect. Even better example here on the 15-minute. 15-minute lower low. This would be the lower high right here at this point. Lower high. We body candlestick close above. This would be the break of the structure right here. At the area of interest, we go to the 30 minutes. Boom. Not the nicest engulfing candlestick. You go to the 1 hour. Boom. Here we have it. This is our engulfing candlestick, our morning star formation. 15-minute shift of structure. That's it. What we got is a shift of structure. And when we go up a time frame or two, we see the actual candlestick that we want to see. Ladies and gentlemen, if that makes sense, say yes. If not, say no. And I dare you to fat finger this. Oh my God. What do we have going on here? To the 8% that don't understand this, just go watch the recording. The majority do understand it. I'm going to answer questions for 1 minute. If I get a Henry Rick, tomorrow's class is canceled. It's obviously a joke. It's not canceled. I just have to scare the people. We have to give them FOMO so they watch the recording. It's not going to actually be canceled. Okay. But if there's one Henry Rick, I'm going to cancel tomorrow's class. Okay. Go. Let's see. What do you guys have? AJ, stop it, man. This is my aha moment. Okay, I have to turn off the chat. It's just too many questions. Alex, answer, bro. Oh, here we go. Oh man, let me get ready for this. I have to share. I know. I mean, it makes some of you guys laugh, right? So it makes some of you guys laugh. Makes my brain hurt. But whatever. So somebody's benefiting at the end of the day, right? Let me go find this dude's question. Okay, let me see. I don't know. I just found another one right now. Fuck. Alex, bro, does a wick to the area of interest count, or must the body close to the area of interest? Daniel French, let me catch you, motherfucker, on the street. Let me catch you on the street, bro. Do we take the trade if we get the engulfing? So, like I said this already, you can go out there and you can, dude, I really do repeat myself, huh? You can go out there and you can cast the bait if you see fish, but you don't have to have the best bait. But you can't cast the bait without seeing the fish. So you can take the trade at the shift to structure, but without the engulfing. Or you usually have both at the same time. All right, ladies and gentlemen, there's just a lot of repetitive questions. Honestly, everything is in this recording. Tomorrow we're gonna retouch up on it, and I'm gonna say the quote of the day now. And I am going to leave you guys with a little bit of homework, right? And once you guys are going to do this homework, you guys are going to realize how easy this shit is, right? I want you to grab someone by the neck. No, I'm kidding. Okay, look. Quote of the day before that. Quote of the day. Fucking Henry Rick. Rich. That is the quote of the day. Henry Rick. You motherfucker. You motherfucker. Henry Rick. Rich. I'm probably saying his name so wrong. Fuck Henry. Fuck Henry. Joe, you might be a nice guy, dude. Might have some kids, a family. Or you might be a they them. I don't know. Right? Where are we accept everybody here, guys? Come on. Let's be adults here. Rick. Honestly, I haven't seen Henry Rick the whole chat now, brother. It's all jokes, man. Like it's not a big deal, man. Okay, let me just turn off the chat for a second. All right, so I was literally gonna give you guys homework, but you know what? I am gonna give you guys homework. This market right here, USD CAD. This is the market. Write this down. Let me know one. Okay. One, is it bullish or bearish? Two, where is the area of interest? Three, where is the shift to structure needed to enter this trade? That's literally it. All right. Should be easy. Should be very, very simple, Henry Rick. And you can let me know for the shift to structure, like let me know where the shift to structure is needed on the 15-minute. You are. So same exact thing that I just did with which one is it? AUD USD, I believe. Yes. So AUD USD. So AUD USD, I let you know that it's bearish. I let you know that this is the area of interest. And I let you know now that in order for me to take this trade on 2 hour, I need a shift of structure here. This is the higher low. This is the higher high. I need to shift the structure here. This is the higher low. This is the higher high. I need to shift the structure here into the trade. This is the higher low, this is the higher high. And I need to shift the structure here on the 15-minute. This is the higher low, and then this is the higher high. And then after that, all of your wishes will be granted, because then you know how to properly read the market. And then you can finally start to execute the one and only set and forget strategy. If this makes sense, say yes. If it does not, say no. Can't get any fucking easier. I'm going back and I'm reading this and I'm like, dude, this is way too fucking easy. Put a W in the chat if you guys liked today's call. Put an L in the chat if you didn't. These results, everybody understands. Amazing. Let me actually do a quick video. All right, so let's blow up the chat, right? All right, so blow up the chat if you guys are liking the last day of the boot camp. I'm kidding. It's not the last day. It's not the last day. We got hella W's in the chat, a couple L's because I just talk shit. W's in the chat. 30-day boot camp is being absolutely legendary. Oh, this guy did a big W and he just, there it goes. There it goes. Yeah, the chat just froze. Yeah, big W, getting big. And people are gonna now learn how to use the set and forget strategy. All right, cool. Quote of the day, Henry Rick. Yeah, motherfucker. All right. Yeah, that's pretty much it. See you guys tomorrow at 7 a.m. Watch this recording. If not, tomorrow you're pretty much fucked. So I'll see you guys tomorrow at 7 a.m. EST. Thank you guys very much for being here another day inside of the boot camp. And see you guys in 12 hours. Pretty much it.